Hi everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of corporate filings and try to make sense of it all. Today we're looking at HCM2 Acquisition Corp's latest filing and S4 amendment detailing their is a big one packed with numbers, risks, and a look at a company trying to shake up the future of energy. So what's the headline here? HCM2, a special purpose acquisition company, is merging with Terrestrial Energy, a company focused on advanced nuclear technology, the Integral Molten Salt Reactor, or IMSR. This is essentially a SPAC deal away for Terrestrial Energy to go public and raise capital. Now let's get straight to the juicy part, the financials and the numbers that really tell the story. Looking at Terrestrial Energy's situation before this merger paints a picture of a company still in the development phase. For the 6 months ending June 30, 2025, they reported zero revenue from engineering services. That's right, zero. But their operating expenses were quite substantial, with research and development costs alone reaching nearly $2.9 million in the first half of 2025. Their general and administrative costs were even higher at almost $7 million, so they're spending a lot to develop their technology but not yet generating revenue from their core business. This is reflected in their net loss. For the 6 months ending June 30, 2025, they posted a net loss of over $12.5 million. And if we look at the full year 2024, their net loss was even more significant at over $11.4 million. This isn't unusual for a company in this stage of development, but it highlights the significant capital needed to bring advanced nuclear technology to market. Now let's talk about the risks, and there are quite a few. The filing explicitly states we have not yet constructed an IMSR plant, nor have we entered into any binding contract with any customer. This is a critical takeaway. Terrestrial Energy is still in the conceptual and development phase. Their success hinges on securing customers and regulatory approvals, which are complex and lengthy processes. They also highlight the risk of construction delays and cost overruns for their planned reactors, which could make projects unprofitable. Add to this competition from other energy sources, both traditional and renewable, and the inherent public perception issues with nuclear energy, and you can see the challenge ahead. What about the SPAC side, HCM2 Acquisition Corp? The financial tables here show a different story. As of June 30, 2025, they had $240 million in marketable securities in their trust account. However, their net tangible book value per share was negative, meaning they had more liabilities than tangible assets before this merger. The key concern for HCM2 shareholders is dilution. The filing shows just how much ownership will shift. In a no redemption scenario, HCM2 public shareholders might hold only about 22% of the new company. Even worse, in a maximum redemption scenario, HCM2 public shareholders might hold only about 22% of the new company. Even worse, in a maximum redemption scenario, HCM2 public shareholders might hold only about 22% of the new company. Even worse, in a maximum redemption scenario, HCM2 public shareholders might hold only about 22% of the new company. Even worse, in a maximum redemption scenario, HCM2 public... And let's not forget about the compensation. The filing details how the sponsor, which is controlled by Sean Matthews, HCM2's chairman and CEO, will receive a significant number of shares and warrants. Mr. Matthews himself has substantial economic interests in both HCM2's founder shares and Terrestrial Energy's convertible notes. This clearly shows the incentives for the leadership to push this deal through, even if it's not ideal for all public shareholders. The board of directors of HCM2, though, has unanimously recommended voting for this deal. This is standard, but always worth noting when considering the potential conflicts of interest mentioned throughout the document. Now let's look at the overall strategy and potential. Terrestrial Energy's IMSR plant aims to offer a cleaner and more cost-effective alternative to traditional nuclear, and even some renewables. Their unique selling proposition is a modular design and the use of standard assay low-enriched uranium or low-U fuel, which avoids the supply chain challenges associated with HALEU used by competitors. However, the risks are significant. They haven't built a full-scale plant yet, and securing binding customer contracts is still in the future. Their reliance on government grants and loan programs like the DOE's Advanced Reactor Pilot Program is also a key factor. The Terrestrial Energy Board clearly sees this SPAC merger as the best path forward for growth compared to remaining independent or pursuing other options. They believe the access to capital and public market profile will accelerate their mission. So, what's my take on this? Terrestrial Energy's IMSA concept addresses genuine energy demands for clean, reliable power, particularly for industrial applications. Their focus on Sayu fuel and a modular design differentiates them and potentially de-risks their commercialization compared to other advanced reactor technologies. However, the company is still very early in its journey with no revenue from its core business and significant reliance on future capital and regulatory approvals. The deal structure also seems quite dilutive for existing HCM2 shareholders, with leadership clearly incentivized to complete the transaction. The success of this venture will largely depend on Terrestrial Energy's ability to navigate complex regulations, secure major customer contracts, and execute on its ambitious construction and fuel supply plans. It's a high-risk, high-reward play on the future of nuclear energy. Alright, that's our deep dive into the HCM2 and Terrestrial Energy merger filing. If you found this analysis helpful, make sure to hit that like button and subscribe for more. We also have a fantastic community over on Discord linked in the description below, where we break down these filings and discuss investment opportunities. Let us know in the comments what you think of this deal and what other filings you'd like us to decode. Thanks for watching. See you next time. Hey everyone, welcome back to Corporate Decodings and Make It Simple. Today we're diving into the S4 filing from HCM2 Accession Corp regarding their business combination with Terrestrial Energy. This is a SPAC deal, a company going public through a merger, and it's packed with details about a company looking to revolutionize nuclear energy. So what's the big story here? Essentially, HCM2, a special purpose acquisition company, is merging with Terrestrial Energy, an advanced nuclear technology company. Think of it as Terrestrial Energy using HCM2 as a vehicle to become a publicly traded company. This deal brings together a SPAC looking for a target with a company hoping to bring its innovative nuclear reactor technology to market. Let's cut to the chase, the financials, and understand where these companies stand. Looking at Terrestrial Energy's historical financials before this merger, it's clear they are in the early stages of development. For the 6 months ending June 30, 2025, they reported zero revenue from engineering services. However, their operating expenses are significant. Research and development costs alone reached nearly $2.9 million in the first half of 2025. General and administrative expenses were even higher at almost $7 million. This indicates substantial investment in developing their technology without generating significant revenue yet. This spending is reflected in their net loss for the period. For the 6 months ending June 30, 2025, they reported a net loss of over $12.5 million. For the full year 2024, their net loss was even more substantial at over $11.4 million. This is typical for a company in this phase of development, but underscores the substantial capital required for advanced nuclear technology. Now for the risks. The filing clearly states we have not yet constructed an IMSR plant, nor have we entered into any binding contract with any customer. This is a crucial point. Terrestrial Energy is still in the development phase, and its success hinges on securing customers and navigating complex regulatory approvals. They also highlight the risks of construction delays and cost increases for their planned reactors, which could impact profitability. On top of this, they face competition from other energy sources and the general public perception challenges surrounding nuclear energy. Now let's turn to HCM2. Their financial tables show a company with about $240 million in its trust account as of June 30, 2025. However, importantly, their net tangible book value per share was negative before the merger, indicating more liabilities than tangible assets. A key concern for HCM2 investors might not have a majority stake in the new entity. Let's talk about the money involved. We see in the filing how the sponsor controlled by Sean Matthews, HCM2's chairman and CEO, will receive a significant chunk of the new company's shares and warrants. Mr. Matthews also has considerable financial interests in HCM2's founder shares and Terrestrial Energy's convertible notes. This clearly shows the leadership's vested interest in making this deal happen, even if it might not be ideal for all public shareholders. Given these interests, it's no surprise that the HCM2 board has unanimously recommended a for vote on the business combination proposal. It's a common move, but always worth keeping in mind when evaluating the information. Now for the potential upside. Terrestrial Energy's MSAR plant aims to offer a cleaner and more cost-effective alternative to traditional nuclear and even some renewables. Their unique approach includes a modular design and the use of standard assay low-enriched uranium or SiOU fuel, avoiding the supply chain issues faced by competitors using HALEU fuel. However, the risks are substantial. They haven't built a commercial plant yet, and securing customer contracts and regulatory approvals are still ahead of them. Their business plan also relies heavily on government grants and loan programs like the DOE's Advanced Reactor Pilot Program. The Terrestrial Energy Board clearly sees this SPAC merger as the best route for future growth and shareholder value compared to other options. They believe the access to capital and public market exposure will speed up their progress. So what's my take on this? Terrestrial Energy's IMIS-R concept tackles a real need for clean, reliable energy, especially in industrial sectors. Their focus on SiOU fuel and a modular design sets them apart from other advanced reactor technologies, potentially reducing development and supply chain risks. However, the company is still in its early stages with no revenue from its core business and a heavy reliance on future capital and regulatory approvals. The deal structure also presents significant dilution for existing HCM2 shareholders, with leadership's incentives clearly aligned towards closing the transaction. The ultimate success of this venture will depend heavily on Terrestrial Energy's ability to navigate complex regulations, secure major customer deals, and execute its plans for construction and fuel supply. It's a bold bet on the future of nuclear energy. Alright, that's our breakdown of the HCM2 and Terrestrial Energy merger. If you appreciate getting these insights, make sure to subscribe and hit that like button. Also, check out our Discord community, linked in the description, for more in-depth discussions. Let us know what you think of this deal in the comments below. Thanks for watching, and we'll see you on the next one. Hey everyone, welcome back to Corporate Dakota, the planes writing the real story behind the numbers. Today we have a thick document, an amendment to an S4 filing from HCM2, Accession Corp, detailing their planned merger with Terrestrial Energy Inc. And spoiler alert, it's a deep dive into advanced nuclear power, and SPAC Accession Corp detailing their planned merger with Terrestrial Energy Inc. And spoiler alert, it's a deep dive into advanced nuclear fire and SPAC complexities. The main event here is HCM2, a SPAC or Special Purpose Acquisition Company, combining with Terrestrial Energy, a company pioneering clean advanced nuclear energy with its integral molten salt reactor, also known as the IMSAR. This is how Terrestrial Energy plans to go public and raise significant capital to fund its potentially game-changing technology. Let's skip the formalities and get straight to what really matters, the financial picture and the risks involved. Looking at Terrestrial Energy's numbers before this merger really sets the scene. For the first 6 months of 2025 ending June 30, they reported zero revenue from engineering services. That's right, no revenue yet, but their expenses are substantial. Research and development costs alone were almost $2.9 million in just that half-year period. And their general and administrative expenses were even higher at nearly $7 million. This shows a company heavily invested in development rather than income generation at this stage. Unsurprisingly, they're posting significant losses. For the 6 months ending June 30, 2025, their net loss was over $12.5 million. And for the full year 2024, the loss was over $11.4 million. While this is common for companies in development, it highlights the substantial funding needed to bring advanced nuclear technology from concept to reality. Now let's talk risks, because this filing is loaded with them. The document flat out states we have not yet constructed an IMSAR plant, nor have we entered into any binding contract with any customer. This is a pretty direct warning. Terrestrial Energy's success is contingent on securing actual customers and navigating regulatory approvals, which are notoriously complex and time-consuming in the nuclear sector. They also flag the risks of construction delays and cost overruns, which could make even built plants unprofitable. Adding competition from other energy sources and the public's often cautious view of nuclear technology, and you see the uphill battle. What about HCM2, the SPAC? Their section shows about $240 million in their trust account as of mid-2025, but their net tangible book value per share before the merger was negative. For existing HCM2 investors might end up with around 22% of the new company. If maximum redemptions happen, that's down to just over 10%. This means those early investors might have a much smaller stake in the combined entity. And let's not overlook compensation. The filing details the benefits for the sponsor controlled by Sean Matthews, HCM2 CEO. He's set to get a substantial number of shares and warrants. Mr. Matthews also has significant economic stakes in both HCM Terrestrial Energy's convertible notes. This shows a clear incentive for leadership to push this deal through, which is something investors should consider. Unsurprisingly, the HCM2 board has recommended a for vote on this business combination deal. While this is typical, it is important context when looking at the potential conflicts of interest mentioned throughout the filing. Now onto the core of Terrestrial Energy's business. Their IMSAR plant concept is ambitious, aiming for cleaner, more affordable nuclear energy compared to existing technologies and even some renewables. A key advantage they emphasize is their unique IMSAR core unit design, which they believe simplifies maintenance and reduces costs, even with the use of standard assay low-enriched uranium or SiLe-U fuel, avoiding the supply chain issues of HALEU used by competitors. However, the path to market is fraught with challenges. They haven't built a commercial plant yet, and securing actual customers and regulatory approvals are major hurdles. Their reliance on government grants and loan programs like the DOE's Advanced Reactor Pilot Program is also a significant factor. The Terrestrial Energy Board has decided this SPAC merger is their best option for growth compared to staying independent or pursuing other alternatives. They see the access to capital and public market visibility as crucial for their long-term strategy. So what's the verdict? Terrestrial Energy's IMSAR technology addresses a real need for clean, reliable energy, particularly in industrial sectors. Their choice of SiLe-U fuel and a modular design could give them an edge over other advanced reactor technologies by reducing supply chain and management risks. However, the company is still very early stage with no revenue from its main product and a significant dependence on future capital and regulatory green lights. The deal also looks quite dilutive for existing HCM2 shareholders, with leadership's incentives clearly driving the transaction. Ultimately, the success of this venture will depend on Terrestrial Energy's ability to navigate regulatory complexities, secure major customer contracts, and execute its construction and fuel supply plans effectively. It's a high-stakes gamble on the future of nuclear power. Alright, that's our breakdown of this filing. If you found this analysis helpful, give it a thumbs up and subscribe for more insights into corporate filings. And don't forget to join our Discord community linked in the description below for more discussions about these topics. Let us know in the comments what you think about this deal and what other companies you want us to decode. Thanks for watching. See you in the next one.